Right now, while you're watching this, China just made a move that's sending shockwaves through global silver markets. The price gap between New York and Shanghai, a staggering $12 per ounce. But here's what Wall Street isn't telling you. This isn't about profit margins anymore. Beijing has weaponized the one metal that powers everything from missiles to solar panels, and they're choking off supply to the West. The question isn't if this will hit your portfolio. It's when, and whether you'll be prepared when it does. Because what happened in the last 72 hours changes everything we thought we knew about precious metals. Welcome to Currency Archive, where we decode the financial moves that shape your wealth. If you've been following markets for decades like many of our viewers, you know that moments like these don't come often. Do me a favor, hit that subscribe button below. At our age, we can't afford to miss signals like this one. And drop a comment. Where are you watching from today? New York? London? Somewhere else? Feeling the tremors of this silver earthquake? Let's dive in. The world of silver just changed forever on January 1st, and most investors didn't even notice what happened. While Americans were celebrating the new year, China quietly pulled the trigger on a strategic move that financial analysts are now calling the silver weaponization. The dragon didn't roar. It simply signed a document that restructured the entire global silver market in one calculated stroke. Here's what they did. Beijing announced new export restrictions on silver that sound bureaucratic on the surface but are devastating in practice. Under the new policy, only large, state-approved companies can export silver from China. And the requirements? They're designed to eliminate competition entirely. A company must have an annual silver production capacity of at least 80 tons. That's not all. They also need a credit line exceeding $30 million. These aren't just guidelines. They're fortress walls designed to keep hundreds of smaller exporters locked outside the system permanently. Industry insiders revealed that the Chinese government issued a list of just 44 companies approved to export silver under these new rules. 44 companies. In a nation that controls 60 to 70% of the world's refined silver supply, only 44 firms now hold the keys to the vault. A Chinese state news source quoted an unnamed industry insider who explained the real intention behind this move. The policy, he said, elevates silver from an ordinary commodity to a strategic material, placing its export controls on the same regulatory footing as rare earth metals. Those last three words should send chills down every investor's spine. Rare earth metals. Anyone who remembers what happened in 2010 knows exactly what's coming next. Back then, Beijing deployed the exact same playbook against rare earth metals. They didn't ban exports outright. That would have been too obvious, too aggressive. Instead, they introduced licensing requirements, paperwork, approvals, and quotas that somehow never quite met global demand. The effect was surgical. Prices for rare earth metals spiked by an unbelievable 4,500%. Western manufacturers suddenly discovered they couldn't build smartphones, missiles, or advanced defense systems without Chinese permission. A generation of supply chain executives learned Mandarin the hard way, not in classrooms, but in desperate negotiations with Beijing bureaucrats. The rare earth squeeze wasn't dramatic, it was bureaucratic. Death by 1,000 forms filed in triplicate. And now they're running the same playbook with silver. But why silver? Why now? Because silver isn't just a precious metal anymore. It's the invisible metal that powers modern civilization. Solar panels need it. Electric vehicles need it. Defense technologies need it. Missiles need it. Smartphones need it. The entire clean energy transition that Western nations are banking their futures on runs on silver. And China just became the gatekeeper. According to the London Bullion Market Association, China is home to 27 accredited silver refineries. The second largest number? Japan, with only 13. Through sheer refining capacity, China effectively controls the flow of refined silver to the entire world. The numbers tell a stark story. In the first 11 months of 2025, China exported 4,600 tons of silver. Their imports, just 220 tons. They're exporting 20 times more than they're importing, which means they're sitting on the world's silver assembly line, deciding who gets supplied and who doesn't. Financial analyst Charlie Garcia put it bluntly in a MarketWatch editorial. China just weaponized silver, and they did it while Americans were busy arguing about whether Bitcoin is real money. He's right. While Western investors were distracted by cryptocurrency debates and stock market headlines, Beijing was quietly securing control over a metal that will define the next decade of technological and energy supremacy. The United States recognized the threat, but late. The U.S. Geological Survey recently designated silver as a critical mineral, a classification that guides federal strategy, investment, and mine permitting decisions. It's a step in the right direction, but it's reactive, not proactive. China didn't just restrict silver exports. They also slapped controls on tungsten and antimony, elements critical in defense technologies. This isn't about one metal. It's about resource dominance across the board. Analyst Faisal Amin explained, China is broader strategy perfectly. China uses export controls to secure domestic industrial advantage and global pricing power. The battle lines are drawn, and silver just became the weapon of choice in a resource war most people don't even know is being fought. The question isn't whether silver prices will rise. The question is how high and how fast. The cavalry isn't coming. And that's the part Wall Street doesn't want investors to understand. When supply shortages hit markets, the traditional playbook says prices rise, miners ramp up production, and equilibrium returns. Supply meets demand, crisis averted. Economics 101. Except with silver, that textbook solution just hit a geological brick wall. Here's the brutal reality that mining executives whisper about in private but rarely admit in public. It takes 10 to 20 years before a single ounce of silver gets mined from a newly discovered deposit. 10 to 20 years. Not months, not quarters, decades. Financial analyst Charlie Garcia described the situation with surgical precision. The supply cavalry isn't coming. It's geologically stuck in traffic. And the traffic jam is worse than anyone imagined. Global mine output for silver peaked back in 2016. Since then, it's been sagging. Metals Focus, a leading research firm, forecasts that even with record silver prices over the next 5 years, mine supply growth will remain modest with only minimal increases globally. Why won't production ramp up to meet exploding demand and take advantage of these skyrocketing prices? The answer lies in something called price inelasticity, and it's a concept that changes everything. More than half of all silver mined globally isn't actually mined for silver at all. It's a byproduct of base metal operations, primarily copper and zinc. These mines don't care what silver is trading for. Their economics and production plans are driven entirely by copper and zinc markets. Consequently, even if silver prices triple, it won't influence production plans. At mines that are dependent on other metals, they'll keep producing the same amount of silver as a side effect, nothing more. When silver comes out of the ground as a byproduct, production costs are incredibly cheap. The mine is already digging for copper. Silver is just bonus material. So there's no economic incentive to increase operations specifically for silver, no matter how high prices climb. Only about 28% of global silver supply comes from primary silver mines, where production is actually tied to silver prices. But even these dedicated silver operations face crushing challenges of their own. Ore grades are declining. The easy-to-reach, high-quality silver deposits were mined decades ago. What remains requires digging deeper, processing more rock, and spending more money to extract less silver. Mining costs are rising rapidly. Labor, equipment, energy, regulatory compliance. Every input cost is climbing faster than silver prices can compensate. The United States provides a perfect case study. U.S. silver mining output was up about 6% in 2024, reaching around 100 tons. That sounds encouraging until you zoom out. U.S. mine output has been essentially flat for years. No growth trajectory, no expansion plans, just stagnant production in the face of exploding demand. And demand? It's been absolutely relentless. Silver demand has outstripped supply for 4 consecutive years. The structural market deficit in 2024 alone came in at 148.9 million ounces. Over those 4 years, the cumulative market shortfall reached 678 million ounces, the equivalent of 10 full months of global mining supply wiped off the board. The Silver Institute projects a 5th straight supply deficit this year. Some analysts believe we're already in the 6th consecutive year of deficits, though final numbers haven't been released yet. This isn't a temporary imbalance. This is a structural crisis that gets worse every quarter. Engineers and optimists keep suggesting that copper could replace silver in critical technology applications, particularly in solar energy. After all, copper conducts electricity. Why not swap it in? Because reality doesn't work in a laboratory time frame. Yes, engineers have proven that copper can technically replace silver in solar panels, but converting a single solar cell factory to copper-based production takes 18 months. There are approximately 300 such factories operating worldwide. Maximum parallel conversion capacity? About 60 factories per year. Do the math. That's a minimum of 4 years just to convert halfway, assuming unlimited capital and perfect execution. No delays, no complications, no financial hiccups. Solar manufacturers aren't stupid. They've been absorbing silver's 180% price increase throughout the year. They keep buying because they have absolutely no choice. Charlie Garcia estimates that silver prices would need to hit 134 per ounce before significant demand destruction occurs in the solar sector alone. And one major bank just predicted that price point could arrive sooner than anyone expects. The supply crisis is real. The timeline is measured in decades, and China just locked the only exit door. Beijing didn't stumble into this strategy by accident. They've been planning this chess move for over a decade. And the terrifying part? They've already won this exact game before. The blueprint for China's silver weaponization isn't new. It's a photocopy of their rare earth metals playbook from 2010, executed with surgical precision and ruthless patience. Only this time, the stakes are exponentially higher. Back in 2010, most Americans had never heard of rare earth metals. They didn't know these obscure elements were buried inside their smartphones, laptops, hybrid cars, and military defense systems. They had no idea that without rare earths, the modern world simply stops functioning. China knew, and they acted. Beijing started licensing rare earth exports, not banning them outright. That would have triggered immediate international backlash. Instead, they introduced paperwork, approvals, quotas that somehow never quite met global demand. The effect was devastating. Prices for rare earth metals exploded by 4,500%. Western manufacturers suddenly discovered they couldn't build anything advanced without Chinese permission. Defense contractors couldn't produce missile guidance systems. Tech companies couldn't manufacture smartphones. Auto manufacturers couldn't build electric vehicle motors. A generation of supply chain executives learned Mandarin the hard way, not through language apps, but through desperate, humiliating negotiations with Chinese bureaucrats who held all the leverage. The rare earth squeeze wasn't a dramatic military confrontation. It was bureaucratic warfare, death by 1,000 forms filed in triplicate. Now, China is running the identical playbook with silver. Same strategy, same tactics, bigger prize. Why is Beijing seeking to corner the silver market? Financial analyst Charlie Garcia answered that question with brutal clarity. It's a matter of economic dominance. China isn't restricting silver exports because they're worried about market speculation or protecting domestic industries from volatility. Those are convenient cover stories. Beijing is restricting exports because they need the silver themselves, and they've figured out something that Washington and the entire Western world hasn't fully grasped yet. The clean energy transition runs on metals, and whoever controls the metals controls the transition. Let that sink in for a moment. Every solar panel, every electric vehicle battery, every wind turbine component, every piece of advanced electronics, they all require silver in quantities that dwarf historical industrial demand. Western governments have committed trillions of dollars to green energy initiatives, climate change mitigation, and technological advancement. But they forgot one critical detail. You can't build any of it without the raw materials, and China just became the gatekeeper to the vault. Garcia put it even more starkly. If you want to build the future of energy, you will need to negotiate with Beijing. Maybe your silver shipment will be approved. Maybe there will be delays. Maybe you'll find yourself suddenly interested in Chinese joint ventures and technology transfers. This isn't speculation. This is the new reality. But there's another sector that makes this entire situation exponentially more dangerous: defense. The defense industry is heavily dependent on silver. How much silver goes into military applications? Nobody knows the exact figures. The secretive nature of defense manufacturing ensures that hard data never sees public release. However, analysts confirm the usage is significant. Missiles, radar systems, communications equipment, guidance systems, electronic warfare technology, they all require silver's unique properties that no substitute can match. China didn't just restrict silver, they also slapped export controls on tungsten and antimony, elements absolutely critical in defense technologies. This wasn't a random selection of metals. This was strategic targeting of the materials that underpin Western military superiority. Charlie Garcia summarized the entire situation with a single devastating observation. China just told us something important, and it wasn't complicated. Silver is no longer a commodity. It's a strategic asset in a resource war that most Americans don't know is being fought. That last part is the most frightening. Most Americans don't know this war is happening. While headlines scream about stock market fluctuations, political scandals, and celebrity gossip, China is quietly securing the physical materials that will determine which civilization dominates the next century. They're not fighting with tanks or aircraft carriers. They're fighting with export licenses and refining capacity. And they're winning. The question every investor, every business leader, and every Western government official should be asking right now is simple. What happens when China decides to turn the faucet off completely? There's a quiet revolution happening in basements, safes, and bank vaults across America. And it has nothing to do with Wall Street. Ordinary investors are waking up to a reality that financial institutions have desperately tried to keep buried. Physical silver might be the last truly sovereign asset left in an increasingly controlled world. Charlie Garcia, the financial analyst who's been sounding the alarm on China's silver weaponization, made a suggestion that traditional finance would consider heresy. Given the dynamics, it might not be a bad idea to hold on to some physical silver. He's not alone in that assessment anymore. For years, silver stackers were dismissed as conspiracy theorists, doomsday preppers, or financial eccentrics living in the margins of serious investing. The mainstream narrative insisted that paper assets, digital portfolios, and bank accounts represented the pinnacle of modern wealth management. But everything changed when China proved that strategic metals could be weaponized with the stroke of a bureaucratic pen. Suddenly, the conspiracy theorists don't look so crazy anymore. There's a profound argument for keeping metal in your personal possession that goes beyond price speculation or investment returns. It's about eliminating counterparty risk entirely. What does that mean in practical terms? When someone owns shares in a silver ETF, they don't actually own silver. They own a promise from a financial institution that claims to hold silver on their behalf. That promise depends on the institution's solvency, honesty, and ability to deliver during a crisis. When someone owns a silver futures contract, they don't own silver. They own a bet on silver's future price, settled in cash, with margin requirements that can change overnight and wipe out positions without warning. When someone owns digital representations of silver in a brokerage account, they don't own silver. They own electrons on a server somewhere, subject to hacking, regulatory seizure, or platform failure. But when someone holds a physical silver coin in their hand, that's actual ownership. No intermediary, no counterparty, no terms and conditions subject to change, just silver sitting there quietly, appreciating in value while bureaucrats in Beijing shuffle export applications into the pending pile. This is one critical reason why silver demand has been picking up dramatically in recent months. Investors aren't just buying silver because they think the price will rise. They're buying it because they want assets that exist outside the traditional financial system. No margin calls at 3 a.m, no brokerage freezes during market chaos, no terms of service agreements that give institutions the right to liquidate positions without consent. Physical silver represents something that's becoming increasingly rare in modern finance. True ownership without permission. The dynamics driving this shift are accelerating. China's export restrictions have exposed a vulnerability that most investors never considered. What happens when the materials you need to build your economy, power your technology, or defend your nation are controlled by a foreign government that doesn't share your interests? Financial experts have been watching silver demand patterns shift in real time. Institutional buyers are accumulating. Governments are scrambling to secure domestic supply chains. Mining companies are being courted with incentives. And individual investors are converting paper wealth into physical metal at unprecedented rates. The United States' decision to classify silver as a critical mineral wasn't just bureaucratic housekeeping. It was an admission that the nation faces a strategic resource vulnerability that threatens economic and national security. But here's the reality that keeps strategic planners awake at night. Even with that classification, even with new mining initiatives, even with aggressive policy changes, the timeline to develop new supply sources is measured in decades. China knows this. They've done the math. They understand that controlling current refining capacity gives them leverage for the next 10 to 20 years, minimum. The resource war isn't coming. It's already here. And most people are still living like it's peacetime. Garcia's final observation cuts to the heart of the matter. This is a war against the United States and the West in general, using silver as a primary weapon. Not bullets, not bombs, not tanks rolling across borders. Silver. The shiny metal that people wear as jewelry, that photographers used in film, that grandparents passed down as coins. That metal just became a geopolitical weapon capable of reshaping global power structures. And the investors who recognize this shift early, they're not panicking. They're stacking, quietly, deliberately, consistently. Because they understand something fundamental. In a world where resources become weapons, ownership becomes sovereignty.